So now we will start. How to prepare the financial statements, and we will see how do we ensure we get 14 out of 14 marks in the examination. Now tell me one thing, all of you have done final accounts related questions in your 11th, 12th foundation or your BCom, and what is the single most challenging thing that you get when you get a question on final accounts? What is the most important challenge, or what is the dangerous thing you feel? Most of the times students have this problem, sir, our balance sheet which should actually balance does not balance. Basically our balance sheet does not tally, right? Now this is one challenge even I as a student had faced initially. Then I figured a way out to ensure that even if I make a couple of adjustments wrong, even if I treat a couple of adjustments incorrectly, my balance sheet will definitely tally. My balance sheet, my cash flow, both these and also the partner's capital accounts will always tally with a very simple trick. Now I am going to tell you in the next 10 to 15 minutes how to ensure that you never have this problem ever in your life that, sir, our balance sheet is not tallying. Sir, what is that approach? Now in any question that you get in the examination, or if you see in the study material, what do they give us? They give us something called as a trial balance. Trial balance as on a particular date. Now this trial balance has some debit items and some credit items. Sir, we already know this. I know you are aware, but still I have to go in a flow, right? So in this trial balance, you have lots of items given. All of those items can be broadly classified into 5 heads. Okay, all of those items can be broadly classified into 5 heads. Sir, what are those 5 heads? Either the item will be an item of asset, and which balance does an asset have? Come on, tell me. Asset has a debit balance. Then you can have something called as a liability. Liability will have credit balance, right? Then you can have some income items. Income again has credit balance. Then you will have some expenses. Now one thing that is very helpful for you at this level is no need to worry about direct expense, indirect expense and all of that. Okay, so you have expenses. Those expenses will have a debit balance, and then you will have capital account related items. So why I'm saying capital account related? Because it can be capital, it can be balance of profit and loss, it can be accumulated reserves, right? All of those items, capital account related, this will have a credit balance. And whenever they give you a trial balance, the trial balance is tallied. At the most, they may have some suspense account, but the trial balance is tallied. Alright, now if you have a tallied trial balance, from this tallied trial balance, what you need to do is you need to prepare a P&L and balance sheet which should be tallied. Now let us put some random numbers here and see how does it flow. So let us say income is 10,000, expenses 8,000, capital account 5,000, okay, and asset some 15,000, and liability is 10 plus 5, 15, 8,000. Sorry, expenses 8,000. Okay, so this is what we have seen. Now, when we prepare P&L, where do we take the income? Sir, on the credit side. So income is 10,000. Expenses are 8,000. So what is the balancing number? Profit 2,000. All right. Then come to balance sheet. In the balance sheet, you have assets of 15,000, liabilities of 8,000, capital of 5,000 plus 2,000 you'll add, right? So you will say plus 2,000, which is 7,000. Now tell me, Is this balance sheet tallied or not? Now you may say, sir, if you give 5 items, even we can tally. But we get lots of adjustments in the examination. We get lots of items in the examination. How do we ensure balance sheet tally is there? Same logic. Whether I give you one item of asset or whether I give you 100 items of asset, does it make a difference? It really does not make a difference. You may do an incorrect classification. That's still okay. But all the assets, if you put it properly, all the liabilities, if you put it properly, all the income and expenses, if you plot them properly, then it will definitely tally. Sir, that is what doesn't happen. So I will ensure as we go through the questions and adjustments and all of that, I will tell you where you can make mistakes. Okay. So once we start reducing our mistakes, you will definitely have a better confidence in tallying the balance sheet. So in a typical question, you have a trial balance from which you have to prepare P&L balance sheet, which will always tally. But sir, we have adjustments. Okay. Adjustments given after the trial balance. Let us say salary payable 1,000. And let me tell you, the items in the trial balance, the adjustments that we will be learning in CA Intermediate, you have already done most of them. There is nothing new I am going to teach. Here what I am going to teach is how to properly place them in the P&L and balance sheet format and how to ensure you do it faster with more accuracy. Okay, so that is what our practice will focus on. So let us say salary payable 1,000. What is to be done? Now always remember, if any item appears in the trial balance, it will appear once in the balance sheet or P&L. So if there is an item, let us say for example, in an item called as opening stock. If there is opening stock in the trial balance, where will you show that opening stock? Sir, credit side of P&L. Will you again show that opening stock in the balance sheet? Sir, that is opening stock. How can we show it in the balance sheet? Of course. So anything that has come in the trial balance, our assumption is that all the related entries have been passed and it will appear only once. Okay. Now, if something has come in the adjustment, a classic example again, closing stock. Closing stock, if it is given in the adjustment, you will do 2 times the adjustment. First time, the closing stock will go to the credit side of the P&L, and second time, the closing stock will be shown as an asset in the balance sheet. Okay. So if closing stock is an adjustment item, you will show it twice. But sir, what if closing stock is given in the trial balance? If closing stock is given in the trial balance, which means we have already adjusted the purchases, and hence that item of closing stock will come only once. And where will we show that item? In the balance sheet only. So always remember, trial balance items will appear once, balance sheet items will appear twice. Not balance sheet items, sorry. Adjustment related items will appear twice. Nobody will tell you this, right? I am telling you based on my experience, a flow which will help you to complete the P&L and balance sheet properly, and you will never be scared of this particular topic. Okay. So let us say we have salary payable. Where is it given? Adjustment. How many times we have to record? 2 times. Where will we record? If at all you get confused, just think of the entry. Salary payable. So the entry is what? Salary expenses account debit 1,000. No need to pass this entry. To salary payable. How much is that? 1,000. So once this expense will come to P&L, second this will come to balance sheet. So now what will happen? Let us see. Expenses will be 1,000 higher. So instead of 8,000, you have 1 more 1,000 of outstanding salary, which means your profit will now be 1,000. In the balance sheet, in the capital account, this profit will be 1,000 and this 7,000 will now become 6,000. Then what about this 1,000 of payable? You will show it under liability. See, adjustment will be done and the amounts will be tallied. Okay. Similarly, if they give you adjustment on depreciation, how many times will it come? 2 times. Once in the P&L, once in the balance sheet. So like this, if there are any adjustments for which accounting entries have not been passed, you will have to give the effect 2 times. Okay. Now, gradually we need to forget this T-shape format, and we have to move towards statement format while preparing P&L and balance sheet. I'm again repeating, I am not teaching you new ways of accounting. I am only telling you how to move from this format to our Schedule 3 format. And please put effort from right now. Every time you do a question, try to remember the items of the P&L and the balance sheet, because that is what is going to fetch you marks in the examination. Okay. Now, there are some common adjustments which you have already done earlier, but it is good to recap before we take up any question. Okay. So before we take up any question, we will ensure that we have gone through the adjustments that are repeatedly asked in the examination. Now, first and the most common adjustment is related to closing stock. Now, as far as closing stock is concerned, I said it appears twice. Where will it appear? Credit side of P&L. Now, tell me one thing. Do we have credit side of P&L in the statement format? We do not have. So, sir, then what is to be done with this closing stock? This will go to an item called changes in inventories. So, whatever closing stock is given, we will use it in changes in inventories. Right? And what is the formula for changes in inventories? We take opening stock minus closing stock. If it is a positive number, we will show it as positive number in the balance sheet, in the P&L. If it is the negative number, we will show it as a reduction from expenses. So, opening stock where we will get from? We will get from trial balance. Closing stock from adjustment. So, one impact goes to statement of P&L. Now, if you have forgotten, we have this line item, right? Changes in inventory. Changes in inventories of finished goods, work in process, and stock in trade, right? So here you will have opening stock minus closing stock. All right. Then that is the first adjustment and a common adjustment that you will give. Sir, what if closing stock is given in the trial balance? That is also a possibility. So typically in the trial balance, if you see, if closing stock appears in trial balance, so if I have a trial balance where I have purchases 10,000, opening stock 2,000, and if there is an adjustment called closing stock, which is, let us say, 3,000, this is an adjustment item. Okay. Here what you will do, in the purchases you will plot 10,000, opening stock minus closing stock, 2,000 minus 3,000, you will say minus 1,000. Okay. Now, if I correlate this with the T-shape balance sheet or T-shape P&L, we have purchases. Now, purchases is 10,000, opening stock 2,000, closing stock 3,000. Okay. Whatever is the sales, the sale may be some number, we will keep that aside for now. This opening stock plus purchases minus closing stock is called cost of goods sold. You had 2,000 of stock with you. You purchased 10,000 of stock. How much of stock is there with you totally? 12,000. You have 3,000 of stock in hand, which means your cost of goods sold is opening stock plus purchases minus closing stock. Please remember this formula. It will be very much useful in your costing also. Okay. So 12 minus 3, 9,000. See, one thing I can guarantee you in my class is that wherever there is an impact of anything we discuss in advanced accounting that will have an impact in any other subject, may it be law, may it be taxation, may it be audit, may it be costing, financial management, I will try to give maximum inputs possible, because you have to read it as a wholesome CA intermediate. It is not that I will study advanced accounting and I'll forget advanced accounting later when I go to audit. That's not possible, because When you audit, you must be aware of advanced accounting. When you go to taxation, you must be aware of accounting principles. When you go to costing, a lot of principles of costing are applied in advanced accounting also. Okay, so we have to do a comprehensive learning, not that I'll study one subject and I will forget it. All right, so cost of goods sold is 9,000. Now the same thing, if I have to prepare in schedule 3 format, I will say in expenses, purchases 10,000, then change in inventory, always remember opening stock minus closing stock. Don't worry about when should I add, when should I reduce and all of that, it will confuse you. Simple formula, opening stock minus closing stock. How much is opening stock? Sir, 2,000. How much is closing stock? 3,000. 2,000 minus 3,000, don't use calculator. In exams you can use, but in class don't use calculator for simple calculations. Okay, especially in the age of AI, we want everything to be happening automatically. So now these days we have tools, right? If you just write 1,000 minus 2,000, you will get the answer, right? But don't get used to it, because it will drain out your brain. You know, we call it sometimes that brain fog or something of that sort that may happen. So opening stock minus closing stock is how much? Minus 1,000. What is the total here? Cost of goods sold or expenses? 9,000. Here also 9,000, here also 9,000, this format also 9,000. Now, if the same closing stock is given in the trial balance, if closing stock in trial balance. Now, please understand, if they have incorporated closing stock in the trial balance, means they have passed the adjustment entry to reduce the purchases balance. Otherwise, you cannot bring the closing stock into the trial balance. The moment you have to record the closing stock in the trial balance, you have passed the adjustment entry. So there are two scenarios possible. First scenario is they will give you opening stock 2,000 and they will tell you adjusted purchases. Okay, so the accounting entry actually is closing stock debit 3,000 to purchases 3,000. Basically, from the account called purchase expenses, we are transferring 3,000 and showing it as inventory. This will become my asset in the balance sheet and this will be my reduction from purchases. So you will get adjusted purchases 10,000 minus 3,000, 7,000. So opening stock of 2,000 plus adjusted purchases, 9,000 becomes my expense. However, then you have to present this in the statement of P&L. You have to show purchases 10,000 and changes in inventory minus 1,000. Sir, how will we get to know? You will get to know because the adjustment of closing stock is 3,000. So you will basically take adjusted purchases plus closing stock and show it as total purchases, and changes in inventories you will show it separately. Mark this point as important. When we come to a question, when we are solving a question, I will tell you how to remember this for examination purpose. Okay, so that is the one of the most common adjustments that we see. I hope it's clear. Now moving on to the next adjustment, which is a very simple adjustment. This is an adjustment related to depreciation. Sir, what is there in depreciation? Nothing. See, when we do accounting standard 10, there we will see the principles of depreciation. But when it comes to financial statement, there is a very simple application. So here you have to see in accounting standard 10 for depreciation or normal calculation of depreciation, it could be SLM method, it could be WDV method. If the depreciation is given as an adjustment, how many times will we have the impact? We will have the impact 2 times. The first impact is in the P&L as an expense, and the second impact is in the balance sheet as a reduction from asset. Now, as far as the property, plant and equipment or fixed assets or intangible assets are concerned, don't use the term fixed asset now. Whenever you are preparing, use the term property, plant and equipment and intangible assets. What you need to understand is you have to show in the balance sheet something called as gross block and accumulated depreciation. Means we will follow the gross method of accounting. That is, say for example, cost is 1 lakh. Cost is 1 lakh. Life is 5 years. Life is 5 years. So how will we show? In the balance sheet, we will show gross block 1 lakh. How much is the depreciation? Assume there is no residual value. 1 lakh divided by 5. Depreciation is 20,000. What is the carrying amount? Carrying amount is 80,000. Carrying amount means amount that we will show in the balance sheet. This is in year 1. Let us say in year 2, how much will we show? 1 lakh as gross block. Gross block is not 80,000. 1 lakh as gross block. Total depreciation for 2 years, which is 40,000. Closing balance 60,000. Like this, we have to give the disclosures of property, plant and equipment in the balance sheet. Same thing for intangible asset. Now a lot of time the question does not give us gross block directly. The question will give us gross block indirectly. Even in that case, you have to show gross block separately, depreciation separately and net amount separately. See, just by doing this presentation, you will score marks. It is not that you don't know how to compute these values. The carrying amount you can compute. You have been doing, fixed asset accounting, PPE accounting in foundation also, in BCom also, 11th also, 12th also. That is not the question. How do you present that in the balance sheet? That is more important. So, as far as depreciation is concerned, calculate depreciation, show it as an expense in the P&L and show it as an adjustment to PPE and intangible asset in the balance sheet. For intangible asset, we use the term amortization. Okay, so depreciation and amortization, these two aspects are also taken care. Then we have something called as outstanding. See, outstanding means the one meaning is very good. Okay, here outstanding means we have not yet paid. We have outstanding expenses. Now, following the accrual basis of accounting, whenever we have outstanding expenses, what do? We will record it as an expense and show it as a payable or a liability. So, you may have outstanding expenses of, let us say, salary. You may have outstanding expenses of, let us say, interest, rent, whatever it is. Whenever you have outstanding expenses, you will add to expense. That is the first treatment. Second treatment, show as liability in the balance sheet. Then we may have prepaid expenses. Sir, what is prepaid expenses? Prepaid expenses means expenses paid in advance. That is not an expenditure for the current period. Say for example, insurance premium. Now insurance premium is normally charged for 1 year. If you have a two-wheeler, go and check the insurance copy. Sometimes 1 year, 2 years also. We have 3 years insurance policy also. So insurance is generally charged for a full year. So let us say we took an insurance policy on 1st of October of year 1 and this expires on 30th of September of year 1. Okay. And we have paid 10,000 for this insurance premium. Okay, that is the premium. Now tell me one thing, is this 10,000 the entire expenditure of April to March of year 1, year 2? This is not year 1, this is year 2. Okay. Is it the full expense of P&L that we prepare for 31st of March of year 2? That is not the case, because only from October till March it is the expenditure of current year. Balance expenditure is of the next year. So October till March, October, November, December, January, February, March. I suggest you to count the months using your hands or fingers in the examination, because sometimes they may give dates like 30th of October or 31st of October, and the moment we see October to March, we may think it is 6 months. Okay, by default we may start thinking it that way. So what I suggest is, for all of you, what I suggest is count October, November, December, January, February, March. How many months? 6 months. So out of this 10,000 paid, 6 months is current and 6 months is for next financial year. So what you need to do, out of this 10,000 you will say expense is equal to 5,000 and prepaid expense is equal to 5,000. Now, where will we show this prepaid expense in the balance sheet? We will show it as an asset in the balance sheet. I hope it is clear. Now, if you have to understand the entry, now if you have to understand the entry, what happens is when we pay the premium, on payment of premium, we'll say insurance premium account debit 10,000 to cash or bank 10,000. This is the entry you will pass. Now what will happen is in the trial balance you will get this number of insurance premium 10,000. Now entire 10,000 is not current year expenses, so we'll pass an adjustment entry saying prepaid insurance account debit 5,000 to insurance premium account 5,000. So this becomes a part of my balance sheet under other current assets, and my net expense now will be 10,000 minus 5,000, 5,000. Okay, so whenever you have outstanding expenses, we will add and show it as a liability. Whenever we have prepaid expenses, we will reduce the expenditure and show it as an asset. Same way, there could be, so this is the fourth adjustment. Same way, there could be adjustments related to income earned but not received. That is, we call it as accrued income. Okay, so say for example, we have a fixed deposit. On the fixed deposit is of 2 lakhs. This pays us 9% interest, and we open this fixed deposit on 1st of January of year 1. Okay, this is the date on which we opened the fixed deposit. Now, on this fixed deposit, interest is due every 6 months. How much? Every 6 months interest is due. Now, if every 6 months interest is due, when will we get the interest? We will get the interest on maybe 30th of June or 1st of July. When is our financial year end? Our financial year ends on 31st of March of year 1. Now, for January, February, March, have we earned the income, interest income? Yes. But is the interest income due? It is not due. That is what we call accrued but not due. Accrued but not due. So, 3 months interest we have to show as an income, but sir, we have not received. No problem, show it as a receivable. So, what is the interest for 3 months? Interest for 3 months is equal to 2 lakhs into 9% into 3 divided by 12. So, 2 lakhs into 9 into 3 divided by 12, if I do 2 lakhs into 9% into 3 divided by 12, I get 4,500. How much? 4,500. Now, this 4,500 is my interest accrued but not due. Should I record it as an income? Yes. We follow accrual basis of accounting. And in fact, Accounting Standard 1 also requires us to follow accrual basis of accounting. Companies Act also requires us to follow accrual basis of accounting. So, on accrual basis, we will say interest receivable or accrued interest. How much? 4,500 to interest income 4,500. Okay. So, this interest receivable will go to the balance sheet as other current asset. Interest income, we will show it in the P&L. Subsequently, on 30th of June, we will receive the interest for how many months? For 6 months. What will be the 6 months interest? If 3 months is 4,500, 6 months interest is 9,000. So, we will receive in the bank account debit 9,000 to interest income. Now tell me, how much should I record as interest income? This is on 30th of June of year 1. We have closed the balance sheet of the previous year on 31st of March of year 1. So when I receive 9,000 of interest income on 30th of June, what should be the entry? Now don't say bank account 9,000 to interest income 9,000. That is not the correct treatment. Interest income for current year, that is 4,500, will only be shown in interest income, and balance is basically received against this accrued interest. So you will say to interest receivable 4,500. We have received 4,500 against the accrued interest of the previous year. That is what we are trying to tell here. I have seen clients where accountants make this blunder. Entire amount they will show as income, and that accrued interest balance of previous year is carried forward in the current year also. So while auditing, you have to be very careful. What is the accrued interest you are showing on the balance sheet? You have to check with all the fixed deposits. Okay, these are the number of fixed deposits into what is the rate into what is the months completed. Like this for month or days. Okay, bank provide based on number of days, so you can compute based on days also. So for all the FDs you have to compute, and finally you have to cross check whether this amount is matching with the accrued interest account or not. Okay, if it is not matching, then definitely there could be a double accounting. Here also they have shown it as income, previous year also they have shown it as income, and I have come across such cases when I was doing audits, right? So this is about income earned but not received. Sometimes what happens is, so we have covered expenses outstanding, expenses prepaid, income accrued but not received. Sometimes what happens is we receive income in advance. We receive income in advance. Sir, what is this income in advance? I'll give a very simple example. All of you have taken classes for a particular attempt. Okay, you have taken classes for a particular attempt. Now, when you have taken classes for a particular attempt, let us say currently we are in the month of January of year 1. Now, our financial year ends on 31st of March of year 1, not 2, sorry. It ends on 31st of March of year 1. And you have taken classes for May attempt. Of year 1. Okay, and let us say for simplicity's sake, you have paid us amount paid in January. How much did you pay? 10,000. You paid us 10,000 and we are giving you access till May attempt. Let us say access expires on 31st of May of year 1. Okay. Now, this 10,000 that I have received in year 1, is it the income of year 1, that is for this period, for financial year ending on 31st March of year 1, or should I split this 10,000 between year 1 and year 2? That is the question. Okay. Now think of it. You have paid me 10,000 for access till May attempt. So whatever services I provide, I have to update the content, I have to clarify your doubts, I have to provide you mock test papers, I have to give you guidance, whatever is there. I have the obligation to give you service from January, February, March, April, May. I have to give service for 5 months. Whereas in March, there is a year end. So this 10,000 is actually received for this 5 months period, and hence whatever we received for this 2 months period is called income received in advance. That means 10,000, if I divide over 5 months period, we get 2,000 per month. Okay. So my revenue should be 2,000 into 3, 6,000 for the first 3 months and 4,000 for the next 3 months. So in year 1 P&L, I will show 6,000, and in year 2 P&L, I will show 4,000. This 4,000 is called income received in advance. Someone has paid me for the full year, but I have my year end coming in between. So the balance period is called income received in advance. Now this income received in advance should not be shown as an income. So what happens is, you get in bank 10,000. 2. Sales, I will show it as only 6,000. 2. Income received in advance 4,000. This 4,000 is treated as a liability. This will go into the P&L. Okay. Such questions are generally not frequently tested at CA intermediate level, but it is good to know. In fact, what you can do is you can search for my Byju's video where they have done all of this, accounting, where they have, pulled up a lot of future revenue in the current period. Okay, so there is a video on YouTube. You can just search for Byju's and Suraj and IndigoLearn. You will get the video, and there you will understand how you can do accounting, creative accounting we call it. Okay, we call it creative accounting to actually window dress the accounts. Okay, so these are the other 4 categories where you have quickly outstanding expenses, add to expenses, show it as a liability. Prepaid expenses, you will reduce from the expenses, show it as an asset. Income earned but not received, we also call it as accrued income or income accrued but not due. You will show it as an income and correspondingly show it as an asset. And for income received in advance, you will reduce it from the income and show it as a liability. So to summarize this discussion, you can have prepaid, there could be expense, and income. Okay, so prepaid or received in advance, accrued or outstanding. Okay, so if it is a prepaid expense, what do? You will reduce from the expense and show it as an asset. If it is income received in advance, you will reduce from the income and show it as a liability. Then if it is an expense which is outstanding, then what do? Outstanding expenses, we will add it to the expenses and show it as a liability. And if it is income received in advance, we will reduce it from the income and we will show it as a, if it's an income which is accrued, then we will add it to the income and we will show it as an asset. Okay, this simple framework will help you to remember these adjustments. I know you have done enough questions on this, but it is good to revise. It is good to revise. Okay. Apart from this, there is one adjustment where I have seen a lot of students struggling. When I say struggling, literally struggling, and that is called, I hope you have already guessed it, that is called provision for bad debt. This is one area where I have seen lots and lots of queries on how to account for provision for bad debt, what to add, what to reduce. There is a lot of confusion. Now you would have learned it in multiple different ways. What I want you to do is to forget all of that. Learn this with an open mind. I will first explain the detailed logic. Then I'll give you shortcuts for the examination. That 2 things will ensure that 1, you will not forget it in your life. Second, you will not forget it for your exams. Okay. So what is this provision for bad debt? Whenever we sell goods on credit to customers, we have something called as account receivable. See, you might be using the term sundry debtors and all, but as we move higher up in our professional curriculum, we have to use technical terminologies. Okay, so we have account receivable. Let us say I sold goods on credit to someone and the account receivable is 10,000. Account receivable is 10,000. Now there are 2 possibilities. One, the customer has defaulted and said that, see, I can pay you only 8,000. I don't have any more money to pay. I can pay you only 8,000, which means out of this 10,000, they will pay me 8,000 in cash or bank. What about this balance 2,000? This balance 2,000 is my loss. This balance 2,000 is my loss. And this loss, what actually occurs is called bad debt. So when the debtor does not pay me that amount that I don't receive, that is called bad debt. When actually the debtor does not pay me, I'll call it a bad debt. Okay. What is this bad debt? Bad debt is a loss or an expense to be taken in the income and expense statement. It's not an expense actually, it's a loss. Sir, what is the difference between expense and a loss? See, when you incur certain expenses, there is an income which you expect that will come to you. Okay, so whenever we are incurring an expenditure, we expect some kind of income that will come to us. Okay, so that is what is an expense. Sir, what is a loss then? Now against this bad debt, will I get an income in the future? I will not get. So that is why it's called a bad debt. See, when I purchase some item, I am incurring certain expense, and that against that I'll get revenue in the future. But if something is gone, it is gone in the air, I'll not receive the money, then that is called a loss. Okay, so that is the distinction between expense and loss. Then there is also a concept called expenditure. Expenditure means capital or revenue expenditure. Alright, so this is an actual bad debt. But sometimes what happens, or when we have to follow the concept of prudence, the customer has not told us that they will not pay us money. There is no indication, or there is no thing that, or they have not communicated to us that they will not make the payment. But by looking at the behavior of the customer, and you can ask this to any business person, when you will have a look at the behavior of your customer, right, slight delays in payment, they'll say I'll pay you now, I'll pay you next day, and all of that. And sometimes, even when you give money to your friends, right, you lend money to your friend, and you go, he says, okay, I'll pay you after 1 week, and then you go and ask him after 1 week, he says, yeah, I'll give you after 2 days, I'll give you after 3 days, continuously delaying. Okay, there is no intention to pay. So the business generally gets a sense, okay, this customer may not pay us the full value, the customer may not pay us the amount of money that we require. So in that case, what happens is, by applying the concept of prudence, we create something called as provision. And this again is a part of your accounting standard 4 discussion. Okay, so provision is covered in AS 29, that is liability related provision. Here provision that we are creating is provision for loss. Provision for loss. Okay, so what we do, we estimate, okay, we have to receive 10,000. What is the likelihood that we will not get money? Maybe 2%, 3%, whatever is the number. Based on that, we create something called as provision for bad debt. What do we create? We create provision for bad debt. So what the companies generally do is, based on their past experiences, they make an estimate. They make an estimate saying that, okay, based on our historical estimates of whatever we have done, there will be a provision for a bad debt for, let us say, 2%. Means whatever account receivable we have accepted that 2% will not pay. 2% will not pay. So because we know 2% will not pay, what we'll do is, we'll create this provision on the balance sheet date. On 31st March of year 1, we'll say, okay, we know the customers will not pay, hence we'll create a provision for bad debt of 2%, that is 200. 10,000 into 2% is 200. Sir, what is the difference between this 2,000 and this 200? Here, this is an actual loss, already has happened. Here, it is still a provision. We may still receive full value. Okay, we are not saying we will not receive full value. We may still receive full value. But this 200, we are safeguarding, cushioning ourselves, saying that, okay, if the customer does not pay, I have already booked it as an expense or loss. So no need to worry. Now, what you need to understand is how to account. Accounting entry. In the first scenario, when there is an actual bad debt of 2,000 and there is no provision, we have not created any provision for bad debt. Okay, so when we have an actual bad debt of 2,000, we have not created any provision in the past. What is the entry for that? The entry for that will be cash received 8,000. So you will debit cash. Bad debt expense 2,000 to account receivable 10,000. This entry you have already done in foundation or in your 10+2 or also in your BCom. Okay. Cash account debit 8,000, bad debt expenses 2,000. Where do we take this bad debt expense? In the P&L. The bad debt expense will be debited to P&L. Alright, we'll debit this expense to the P&L and the account is closed, matter is closed. However, What happens when we have a provision? Let us say if provision of rupees 200 was created. If provision of rupees 200 was created, then what would happen? Now, when we create a provision, what are we doing? We are saying that, see, we are expecting 200 of loss. We are expecting 200 of loss. So, what we do? We create the provision by debiting P&L account debit 200 to provision for bad debt 200. Okay. When we debit P&L, we can also pass the entry saying bad debt expenses. So basically what we are saying, we are estimating that we will get a 200 of loss in the future, and hence we are debiting it to P&L today itself. Today itself we are debiting it to P&L, and we create an account called provision for bad debt. This is a credit account. This is a balance sheet item. This is like a contra account to account receivable. So sir, how will we present this in the balance sheet? In the balance sheet, what we will do, we will take 10,000 of my debtor, and I'll say we expect 200 we will not get. So 200 we will reduce from the debtors in the balance sheet. All right. So in the P&L you will have to provision for bad debt, how much? 200. In the balance sheet you will say, sir, 10,000 is the account receivable. I have created a provision for how much? 200. Now I am expecting I will receive 9,800 only. Okay. Assume for a moment this happened in year 1. Okay. In year 2, that guy actually paid us only 8,000. Actual receipt is only 8,000. So what is our total bad debt expense? Total bad debt expense is 2,000. But out of this 2,000, I have already created 200 of expense in the previous year. Which means, how much expense should I recognize in the current year? I have to recognize 2,000 minus 200. So if we receive actually to 8,000, how much is my bad debt? My bad debt is 2,000. Correct. Now, when I show it in my P&L, I will say to bad debt expense, how much? 2,000 minus, already I have a provision created. So I will reduce it from the provision for bad debt 200, and net expense will be 1,800. So in other words, whatever are the total bad debt expense in the current period, from that I will reduce the provision which I already have. I will reduce provision which I already have and only book the net amount in my P&L. Are we clear? Very good. Now, like we created provision in the previous year, we also have to create provision in the current year. So this provision for bad debt that you have created is opening balance. Now if I have to create a fresh provision in the current year, what is the entry we passed? We said we'll debit the P&L. So you will add provision for bad debt that we have to create in the current period as closing balance. Let us say 300. So my total expenditure will be 2,100. So in a nutshell, what is the amount to be debited to P&L? 1. Bad debt expense as per trial balance 2,000. In the trial balance itself you will have opening provision. So you will say minus opening provision as per trial balance. How much? 200. Then you will add closing provision as per this information is given in adjustment. that you have to create provision of 2%, 3%, 5%, that is given to you in the adjustment. So closing provision as per adjustment, assume it is 300. So what is the total expense? Total expense is 2000 minus 200, 1800 plus 300. My total expense is 2100. Now here, one thing that you have to keep in mind is, this is as per adjustment. And what did I tell you? Any item given in the adjustment has to come twice. Once it has already come in the P&L, and where will be the second impact? Second impact of the closing provision will be given as a reduction from account receivable in the balance sheet. Okay, so this is one adjustment, and again when we do a couple of questions, I will re-emphasize on these adjustments, and please ensure you understand the logic and you also understand how to handle it in the examination. See, one small tip I will give you. Logical understanding is very good, conceptual understanding is very good, we have to ensure that, but when you are going in the examination, for some items it has to come automatically. If you start searching for logic in the examination, you will waste a lot of time. So understand conceptually, then I will give you tricks like this trick. Okay, so that immediately in the examination you can directly pick up, or something like this summary. Directly you can pick it up in the examination, no need to worry. When we are doing questions in the class, when you are learning things, you have to understand conceptually. But in the examination, automatically the answer should come in your mind. Okay, so these are some important adjustments that we need to understand in the context of financial statements. Now, we have understood how the information flows from trial balance. What are the items given in the trial balance? Income, expense, asset, liability, capital. Then there are adjustments. Adjustments are always accounted twice. Okay. Now, when we say adjustments are accounted twice, it could be once in P&L, once in balance sheet. It could be 2 times in the balance sheet also. Sir, how 2 times in the balance sheet? Maybe we have, sold off some plant and machinery. Okay. Now, when we have sold off some plant and machinery, we have to account for cash, we have to account for the, disposal of plant and machinery, and of course gain or loss. So it can be 2 times in balance sheet also. It can be partly in P&L, partly in balance sheet. Multiple scenarios are possible, right? Now, this question comes to you in the examination for 14 marks. And here is where it is very, very important to understand how can we score maximum. Now, in this 14 marks, what all are we expected to prepare? Most of the questions we are expected to prepare balance sheet, P&L, notes to financial statements, 14 marks. And a very important part, which is working notes. Working notes should form part of your answer. All of these 4 items will carry marks. Generally, how it works is, when you look at a balance sheet or P&L or notes to financial statement, generally they may say, for every 4 items, 1 mark. For every 4 items, 1 mark. Or sometimes they may say, for total of equity, 1 mark. Total of liability, 1 mark, means all the liability items. All the asset items, 2 marks. That is also possible. But typically, for every 4 items, you'll get 1 mark. Okay. And generally carries 3 to 4 marks in the examination. Which means, even if your balance sheet is half correct, you can get 2 marks. Come to P&L. Again the same thing. For every 4 items or 3 items, see, it depends on number of items also. I'll put 3 also. For every 3 to 4 or sometimes 5 items, 1 mark. Here also same logic. For every 3 to 4 items, you get 1 mark. And this also comes for about 3 to 4 marks. So for example, income, if you compute correctly, 1 mark. Then expenses, if you compute correctly, maybe 2 mark. Then taxes, if you compute correctly, maybe 1 mark. Profit after tax, 1 mark. Something like that, 3 to 4 marks. Okay. Then we have this notes to financial statement. Now here is where I want you to be 100% clear and keep it in your mind. Write it somewhere where you have to write. Unless the question says, don't prepare notes to financial statement or prepare without notes to financial statement. You are going to prepare the notes to financial statement even if it takes 5 minutes extra. So what are these notes to financial statement? Maybe in the balance sheet we have share capital. What maybe? We have share capital, right? The breakup of the share capital, authorized, issued, subscribed, paid up. It may be only one item. It may be only authorized, issued and paid up 10,000 shares at 100 each, and you just write 1 lakh. The same 1 lakh you write in the balance sheet. But writing these notes to financial statement will fetch you somewhere between 0.5 to 1 mark. Sir, what is the use of 0.5 to 1 mark? Go and ask that person who was stuck at 39. Had it been 39.5, it would have been 40. Ask that student who was stuck at 59.5 or 59. Had it been 59.5, it would have been 60. It makes a lot of difference. Okay. I'm not even talking about ranks. Okay. I'm not even talking about ranks. You lose rank by 1 mark, 2 mark and all of that. That is still there. But it can make a difference between successful and unsuccessful result. So it may take a minute extra. Make these notes to account. Now typically the notes to financial statement will carry somewhere between 3 to 5 marks depending on the number of items for which you have to prepare the notes to financial statement, and the balance marks are allocated to working notes if at all you have to create working notes. Okay. Now 2 things. Can I include these working notes in notes to financial statement? You can do it. But if you keep it separately, it will be much neater. Okay. So as we practice, I will tell you how to present these different items. Okay. So 3 to 4 marks here, 3 to 4 marks here, roughly about 7 marks. 3 to 5 marks here, and maybe working notes, maybe 2 to 3 marks, depending on number of items. You may do working notes correctly. For that also you will get 2 to 3 marks. You may have written notes to financial statement. For that you will get marks. You will not get marks for just presenting the format. A lot of students I see, they do this. They will write all the format, balance sheet and P&L. You will not get marks for that. You will get marks for items with their amounts. If your amounts are matching and if you have given the correct heads, that is done. One more thing, order of balance sheet is important. So I'll just give you one example here. This is an actual case that I've seen. We have Ind AS based balance sheet and we have accounting standard based balance sheet. In accounting standard, what is the first item we get? On the top side, we get equity and liabilities. Second part is assets. I have seen a paper of a student. In Ind AS balance sheet, what we need to do is we show assets first and then we show equity and liabilities. I have seen a student, CA final student, all the amounts are correct. Order is ulta. So if the order is ulta, if you do equity first, asset next and all of that, you will get a big 0. Okay. So forget this. Don't do assets and equity liabilities in the exams. Okay. You have to do as per the accounting standard format. P&L also has to be in format with all the notes to financial statement, unless the question says don't prepare notes to financial statements. Okay. Now typically we get a very long question which has trial balance and you have some adjustments. When you are solving this question in the examination or also when we are practicing, one doubt which a lot of students get most of the times is, sir, should we prepare working notes first or should we prepare working notes at the last? It completely depends on you. I was someone who used to prepare working notes at the beginning. Now, if you want, if you are comfortable for working notes in the beginning, go ahead. Otherwise, what I suggest is leave 1 page for balance sheet, 1 page for P&L, 2 pages after that for notes. After this, you can have your working notes. Okay. Examiner, please follow this. Now, by dedicating 1 full page to balance sheet, 1 full page to P&L, 2 pages or maybe 3 pages if you want to be on the safer side, and then balance, after that you can start your working notes. Okay. The reason why I'm telling you this is, this will give you a lot of comfort to answer the question in the examination. No need to worry. If you want working notes first, you can do working notes first, then prepare balance sheet, P&L and notes leave one full page. Sir, I am doubtful, my handwriting is bigger, I need more spaces. Then leave 1.5 page for balance sheet, 1.5 page for P&L, and then follow it up with the notes to financial statements. Okay, that is the structure you should follow. Now, we have done, or we have understood the concepts. We have understood important areas that you should focus on. In tomorrow's class, we will take up an actual question and we will see how to prepare a balance sheet and P&L in a structural flow. Now, as far as these notes to financial statements are concerned, okay, we have not yet done this in detail, and I don't want to do that in detail initially. First, we will cover all the notes to financial statements as per respective questions. After that, we will have a review of important notes to financial statement, and then we'll go through the remaining notes to financial statements. I hope you got a lot more clarity on how to approach the questions in the examination, and in the next class we will take up a question and solve it along with you.